Good day, this is Matt from Let's Not Be Fools. What is the current capital gains tax rate? I'm going to cover that in a minute. But what is a capital gain? It's simply the profit on the sale of a capital asset. So that capital asset could be a share of stock, it could be a parcel of land, it could be a work of art, it could be a business. The capital gain is actually whatever you profited on the sale of that item. So let's say you bought that share of stock at $500 and you sold it at $1,000, then that $500 gain that you have is the capital gain on that asset. Now, whether it gets taxed at the short-term capital gains tax rate or the long-term capital gains tax rate depends on how long you held that asset. So if you held it for less than a year, you're going to get taxed at the short-term capital gains tax rate, which is basically your normal U.S. tax rate on income. But if you held that asset for more than a year, then it is subject to the long-term capital gains tax rate, which is much less than the normal tax rate. And we're going to cover that right now. Here's a table showing the 2019 federal marginal tax rates for singles, marrieds, and heads of households. And I've covered this in a different video. You may recognize this chart. So it's important to realize that short-term capital gains, those assets that you've held for less than a year and sold at a profit, those are going to be taxed at your U.S. marginal tax rate. So there's no difference between what you're being taxed on your normal income and your short-term capital gains. It's still going to be those same rates. Long-term capital gains, which are applicable to those capital assets that you held for more than 1 year and then sold at a profit, are taxed a little bit differently. The amount of long-term capital gains tax that you pay is dependent upon your income level. If your U.S. taxable income is $39,375 or less, then your capital gains tax is actually 0%. However, if your income ranges from $39,376 all the way up to $434,550, then your long-term capital gains tax rate is 15%. Then if you exceed that level and your income is over $434,551, then you're going to pay the full 20% capital gains tax rate. There are some exceptions to these tax rates. For example, there are certain collectibles that are taxed at a 28% rate no matter what. And then there's also some people who are subject to an additional 3.8% tax rate based on the income levels that they make. So those things need to be checked out. There are also certain exceptions when it comes to selling real estate. So you need to check that out. If you're selling your home and you have a capital gain, there are certain things you need to know about in terms of protecting that capital gain from taxes if you can. The intent of this video was just to show you the capital gains tax rate in the broadest sense. Again, there are different conditions and certain circumstances that you need to check out. But overall, this covers probably 90% of people's capital gains tax situation. I hope this video was helpful. Have a great day.